सुमित जी का जो पावर पैक प्रेजेंटेशन के बाद आई थिंक आई क्विकली ट्राई टू रैप अप. एक बहुत इंपॉर्टेंट सेगमेंट है अपार्ट फ्रॉम शेयर मार्केट इज कमोडिटीज़ मार्केट, जो इंडिया में अभी तक अंडर यूटिलाइज्ड है. इसके बारे में नॉलेज बहुत कम है. बट व्हाट वी वांट टू अंडरस्टैंड फ्रॉम दिस प्रेजेंटेशन इज बहुत इंटीग्रल पार्ट है. इफ़ यू आर अ प्लेयर इन फाइनेंशियल मार्केट और इफ़ यू वांट टू बी अ पार्ट ऑफ फाइनेंशियल मार्केट, understanding commodities gives you a lot of mileage. You have discipline, you have a focus, but without knowledge, it becomes very difficult to execute your goal, your result, whatever you say. Right? So I'll try to briefly cover up why it is very important to understand commodities market. To continue my presentation, first we'll cover up what's the origin of commodity, then commodity dependency, then we'll understand how the knowledge of commodity market helps us, what about commodity bull run, and if you have any questions. See, commodity trading is not new to human being, like to a mankind. If you are into commodity, you understand our barter system started with commodities. Right? हम लोग goods exchange करते थे in ancient civilization. There where the commodity actually trading began. Now, if you talk about futures trading, it began all in Japan, where a structured way of trading was traced. After that, you find that CBOT was launched in 1848, where a structured exchange-driven commodity trading started. Then in India, we had Bombay Cotton Exchange in 1875, where in India we found that a commodity was structurally traded. Now, let us understand the commodity dependency. See, if you go through this slide, 2/3 of all developing countries are commodity dependent. आप आज इंडिया ले लीजिए, ब्राज़ील, रशिया, all the Gulf countries, they are commodity dependent. Either they export commodities or they import commodities, right? So if you see between 1995 and 2013, 50% recorded their increase in commodity dependence. Why did that happen? Because the world was growing. We had more number of countries getting linked due to this globalization, and the dependency increased. Now if we talk, commodity has become an integral part of our life. If whatever fuel we use for our vehicles, to the cooking gas, natural gas, LPG you use for your domestic purpose, to copper you use for your industries, the food we eat, right? The gold we use for our jewelry. In every part of our life, commodity plays an important role. Whether we know it or we don't know it, right? When we talk from financial markets perspective, commodities are important, but it also plays a very important role in our daily lives. Now, when we talk of commodities, we also find that this is a separate portfolio. It's a separate investment asset class where you can also, globally you will find it everywhere, and it's growing. Now, we try to understand how it helps us in understanding, when you want to understand commodities market, this is also going to help you in, in your important financial decisions. Like if you talk about Sensex, just see the composition of Sensex, you will find nearly 31% of our sectors are commodity dependent. When you talk of, say, FMCG, if you talk about companies like ITC or Hindustan Unilever, you talk about auto sector, you talk about mining, oil and gas, engineering. So in an indices, right, if 31% is commodities, so it actually affects our investment decisions. And it's very important for us to understand or to have a background of what commodities is all about, how it's going to help us in taking our financial decisions. Now, just to understand, now when we talk about commodities, we also need to understand the bull runs about it. right? We know that there are equity bull runs. but equity bull run is always dependent on a commodity bull run. Say, if you take, say, for the last commodity super cycle, it lasted for 15 years. Now, from 2008, the commodity markets have been not in so much of demand. There has been, we have seen economies collapsing. Up, Russia is an example where it was one of the superpowers. It is almost on the verge of bankruptcy. If you take Venezuela, the country which was oil dependent, when the crude oil prices fell from $100 to $40, the country was on the verge of bankruptcy. So, commodity dependency on these economies are also very important. So, it's important for you to understand the commodity super cycle. Now, if you talk about equities market, see, equities market is a subset of commodities market, right? You would be thinking how it works. See, when you talk of a stock like Hindalco, in February 2016, Hindalco price was around 80 rupees. Within a year, the stock has moved to 200 rupees. Is it only the company's fundamental or the corporate governance which has driven the price? No. The price has also been driven because there is a start of a bull run in the metal sector. The world economy was not, was not in a growth phase. So countries like China were slowing down. Okay, so demand for metals were going down. So that's why all the companies which were related to metals and mining were not performing. If you talk about Tata Steel, if you talk about National Aluminium, in India I am talking about, right? So there's companies like Sterlite, which has now been named as Vedanta. These stocks did not perform for last 5-6 years because the commodity in the industry, right, belonged to a commodity which is mining or metals, and that was not performing. So any company, when you talk about a bull run, you have to understand जो सेक्टर की आप बात कर रहे हैं वो सेक्टर किस कमोडिटी को बिलोंग करता है. If you talk about oil and gas, see how Reliance has performed in last 5-6 years. Okay, people have been waiting for phenomenal returns, the returns are not coming. See, companies like, if you say there are oil exploration companies, their prices have become 1/3. Why? Because crude in last 2 years have fallen from $100 to $40. Now, since the crude prices have started recovering, you find all these companies are giving you phenomenal returns. So if you take any example, like if you talk about coffee, right? Tata coffee prices shot up in last 2 years. Why? Because there was a fall in production in Brazil, which is the main exporter of coffee. Now, when you talk of companies which are related to tea, in India, if there is fall in production, you will find tea prices going up, and so the share prices of companies which are related with tea. So there is always an interlinkage, and this interlinkage, helps you. I would say that when you understand commodities market, it helps you in understanding equities better, and that helps you in making your investments judiciously. Now, just to take another example, now you say Tata Steel, right? I'm talking about mining or steel sector because Tata Steel bought Chorus. They bought Chorus at a time when steel or the metal sector was in a bear phase. Tata Steel being a very efficiently governed company, but the superset, which I would talk about commodities market, that was not performing. So even in spite of a company having an excellent track record, excellent corporate governance, could not perform because the overall picture was bearish. Now they had to sell off that company. Now we have started seeing some kind of green shoot in the overall commodity across the globe. Now we are also talking of a bull run in equities, but we have to understand the bull run of equities has origin in commodities market. If commodity market has started picking up, this will fuel equities market, and equities market are likely to short up further. Now in India, what is happening? You don't have much avenue available to directly understand or trade in commodities market. You have few exchanges, and those exchanges have very limited products. You have only futures which are available now. So we hope that in coming times, if options are allowed, if FIIs and banks are allowed, this market will become mature, and you will have opportunities to make money in commodities market as well as you do in equities market. But till that time, you or as a client, as a layman, as an industry professional, you need to even to manage your finances or to design your finance, you need to have some kind of input on the commodities market. If like before this presentation, you might be flipping your Economic Times, you find a page dedicated to commodities. Unless you are a trader, you just skip that page, right? So now you have all the more reason to go and see like what is happening, why all the global giants are putting up money to shore up their investments or to make their like infrastructure ready for the next bull run. Right, so I would say that after 2008, we have seen 7 years of a bearish phase. Now it seems like from 2016 onwards, a new commodity bull run has begun, and this is going to drive all equities, financial markets accordingly. Right, so anybody if would like to, we are present at stall number 12, and our company, we provides advisory on commodities as well, apart from the regular broking business which we have. Now, if anybody wishes to ask any question on any of the sectors. Yeah. Yeah. Exactly, yeah. See, if you talk about Reliance, Reliance is into oil exploration, and it is also into polymer business, which are derivatives of crude. Right? What happens when when crude prices were around say $40 or between $40 and $50, the raw material, which is polymer, which is used for making plastics, that were in high demand. So if you go back and see the results, they were reporting a loss on their exploration business, but their derivative business, which is like polymer business and plastic business, that were doing well. Yeah. Just to add on to that, see, if you would have seen companies like Syntex Industries, right, or companies which are into plastic, like Nilkamal Plastics, they had a phenomenal last 1 year. Why was that so? Because the polymer which is required to make plastic tanks or the plastic chairs, that were available at almost 50% of the price. But the MRP of your chair or MRP of a Syntex tank did not come down by 50%. So your margins grew. And when your margins were growing, the company's results were good. Yeah. Anybody?
Lead.
Lead. Yeah. See, lead is a commodity which is primarily used for automobile sector. Okay, which is used in making batteries. Okay, a battery, when there is a demand for automobiles, like more cars are being manufactured, more trucks are being manufactured, you need batteries, right? So last 5 years, the demand have been falling. You have seen prices, even in international prices, have fallen below $1,600. Even in MCX, the prices in Indian market, the prices had fallen at times below 100. Now it is going up. Now it is between 150 and 160. And with global growth, catching the momentum, it seems that the prices are likely to go up. And we assume, right, we at MDirect assume that a new commodity bull run has started. And if that starts, the average, time which it lasts is at least 15 years to 23 years. So you have a long way to go. Yeah. Yeah. See, very nice question. Yeah. See, if you see, yes. See, when you heard Trump's inauguration speech, he mentioned about building infrastructure in US, right? So if you see, most of the infrastructure in US were built in 80s, right? When Japan was one of the flourishing economies. So in last 30 years, the infrastructure has not been built. Whatever infrastructure growth happened, mostly it happened in China. Now when everything is likely to be replaced, right? A new bridges or new highways are going to be made, right? That will give a tremendous boost to your demand for base metals. So that's the reason you saw that all markets across the globe, the base metals shot up, right? When China came, it's a phenomena where that every year, after the Chinese holidays, people come and book profits. So you have seen the prices falling. Even yesterday, the base metal prices fell. But now China is, again setting itself up from just being a consumption-led economy to investment-led economy. So on one side, you will have US from where the infrastructure demand would come, and you will have China along. So there is all probability that these markets are going to shot up. Now you can see those things in equities market. See how Hindalco, National Aluminium, the prices have doubled in last 6-7 months. Even Tata Steel has started growing. Yeah. Yeah. See now crude, it was a very important decision by OPEC that they have cut production. Now it looks like, the global growth forecast has been revised, and it looks like it's likely to grow by 3%. So there is a demand for crude, which is likely to grow, and we don't see that it again coming back to $40. Like it's likely to be in a range of $60. So there's a lot of scope, at least 20% hike from current levels. Yeah. Yeah. See, you are partially correct from, if you talk about Indian context, because in India, we hardly have any product. It's only futures which is available, right? So that makes it less attractive. So it all the way becomes a speculative, asset class. But when you talk about globally, right, where you have more structured products available, commodity as an asset class is safer than equities. And if you see globally, it's 3 times the size of equities. Yeah. Yes, yes, that's true, right? Unless, see, that's why I told you it's partially correct. Unless we have more products available in India, right? Unless the option comes and the banks and FIs are allowed, it's only a naked future position, right? You end up, you end up making less money as you would have made just by buying the share of that particular sector. We were expecting in this budget, but no announcements happened. So maybe by June, because SEBI is ready with the product. It has issued circulars to the exchanges. Now it's up to the exchange to come up with that. Yeah. Yeah. I'm sorry I didn't get it. Yeah. See, it can be done, right? You have to identify your broker or a financial expert, right? The asset allocation can happen. It can happen in gold, it can happen in base metals, it can happen in silver as well. So for that, you need to identify a broker. Like just a disclaimer, we are also one of them, and we are available at stall number 12 on the ground floor. Yeah. Yeah.
Any more questions for Jay? कोई और सवाल?
I would say silver.
Why?
Yeah, see, one is solar, right? And there is a growth in demand for industrial metals. Now, gold is not likely to perform because 2017 is likely to be a year for equities. You know, where equities market would do well, so safe haven appeal would go down. Even in Indian context, government is not in a mood to promote, a dead asset like gold. They want gold to be in a paper form or in a financial, you buy it through ETFs. Yeah. Thank you so much. Thank you. Yeah.
Okay.